Financial statement. Financial statement is a formal record of the financial activities and position of a business, person or other entity.
First of all, do you know what is the example of personal financial statement? Do you know what should be included in financial statement? There are two types of personal financial statement, which is first is the personal cash flow and second is the personal balance sheet. The personal cash flow statement is to measure your cash inflow and cash outflow to show how much have you been spending your money and how much the income that you earn. What is cash inflows? Cash inflow is the money that we receive, or simply said, the money that we earn. The example of cash inflows is salaries, interest from saving account, dividend from investment, capital gains, and also the sale of assets.
Next, cash outflow represents all expenses that you have spending. It refers to the types of costs such as rent or mortgage payments, utility bills, and groceries. The purpose of determining your cash inflow and outflow is to find your net cash flow. If you get a positive net cash flow, it means that you earn more than you spend, and you also have some money left over from that period. Meanwhile, if you get a negative net cash flow, it shows that you spend more money than what you earn. In order to know your income level, you have to make sure that your cash outflow does not exceed cash inflow. This is because the more you spend in excess of your income, the more likely you are to incur a loss.
Personal balance sheet is a personal balance that provides an overall snapshot of our wealth and a specific period in time. It is summary of your assets, your liability, and your net worth. What is asset? Asset is a personal asset. It's what you have spent money on. Or can be said, personal asset is anything that you own that has monetary value. If you own it and you can sell it, then it's an asset. So what is liability? Liability is how you obtain that money or anything that you have to eventually pay back. For example, for mortgage, loan, or credit card debit.
Lastly, net worth also should be included in personal balance sheet. Net worth is the difference between what you own and what you owe. In net worth, you will know how wealthy you are because it shows how much asset that you have and how much debt that you already paid. If you still have lots of debt that's still not paid and the value is bigger than your asset, this shows that you are lost, which means you own more than you own. You need to decrease your debt and increase your asset to make your financial more stable. First of all, the importance of financial statement is you can easily manage your income. Do you know why you need to manage your income? This is because to make sure that you will not overspending or spending your money in unnecessary things. Through this financial statement, you will be able to track down all the flow of your money. You will know what did you spend your money on or how much you earn for this month. Is the money that you earn enough for you to get a comfortable life? This proves that you need to use your money wisely and make sure to not overspending. So, this concludes that it is important for you to manage your income and do your personal financial statement.
Importance of financial statement is personal finance and cash flow. Another reason why personal finance is important, it can help you to increase your cash flow. When you keep track on your expenditure and your spending pattern, you can easily be able to increase your cash flow. Things help you to grow your cash flow include debt spending, prudent spending, and careful budgeting. All this will ensure that you do not lose your hard-earned money to unnecessary expenses. Therefore, having a personal financial plan is vital to ensure you are on the right financial track.
Okay, another reason why personal finance is important is you can separate which debt that become your most priority that need to pay first. So your saving will never be overspending. Then it keep remind you to keep track of your income in and out. So your expenses and revenue will be counted too to make sure you can survive without unpayable debt. Then lastly, build an emergency fund to fall back on means.
So next, I will explain about the budgeting, spending, and savings. Personal financial statement helps you to understand how much you earn, what are your monthly expenses, and help you to budget within that income. The community need to know that they will also living in huge debts even if they earn a high income, but they are not good at financial planning well. Therefore, the personal financial statement is important for the community to budget their spending for not exceed their income. If your spending does not exceed your income, so that you still have some money left to savings.